Let's talk about an APR, an annual percentage rate, as it pertains to home loans, to mortgages. So an APR, what's side note, what's really interesting is I'm making this video. I haven't had people ask, anybody really ask about APR in a very long time, which is really interesting. And that's, in my opinion, good. And here's why. An APR, it is not your interest rate, right? So when somebody sees the APR and like, oh, APR, whatever it is, you're going to find that it's not your interest rate. It's not what your interest payments are based off of. The intent of the APR, the purpose is so that fundamentally this should be, if the world was perfect, which it is not, but if it was, you should be able to put two loan programs next to each other and say, oh, this one's a lower APR, this one's the better loan, right? Or the less expensive loan. Let's not say better because there's sometimes it makes sense to take higher rates. That's not for this video, but it's true and it can because it reduces your cost. Anyway, the APR. So what it's not is your interest rate, meaning your interest is based off the actual interest rate. So what is an APR? Simple. If you take closing costs, and it's not all closing costs, that's what makes this thing a little tricky. But if you they call them prepaid finance charges. So whatever those little check boxes are that said these fees are prepaid finance charges. So they put all those fees. They then figure out a yield, a 1-year yield for that 12 months, because they're saying, okay, if you paid in this, let's pretend you bought a home this calendar year, they're going to say, what does that yield look like for this calendar year of all these fees? And they add that to your interest rate. And that's how they come up with an APR. The reason why it's a little funky is because not every company calls the same prepaid finance charges the same thing. So in other words, or no, I didn't say that right. How about this? I worked at a company and they said, hey, these fees are prepaid finance charges, PFCs is what they call them in the system. Next company, not all those fees were included. They included some other ones or they left some out. So it's really interesting that just as an industry, it's funny that it's not, now it is, by the way, like 90% of them, like the vast majority are the same across the board, but you can still have a little variance one way or the other. So again, it just makes it really hard and difficult to know exactly if it's truly apples to apples. So again, I understand the purpose of the APR. I think the real intent of it is just to make sure the buyers know that there's something more than just your interest rate. That's how the lender's making their money, is also in terms of fees. And again, not most of the fees aren't even the lenders, right? It's title companies and third parties and things like that. But that's what the APR is. With ARMs, it gets really wacky because again, ARMs are going to change. So again, the APR doesn't do a whole lot for ARMs because the interest rate will change down the road. So an APR, again, to recap, to summarize, it's a good tool to at least look at. But more importantly, I think is work with a lender you know, like, and trust. Make sure they're putting you in the right program. Because I promise you, I can spend an hour on this. It's not about the lowest interest rate, not all the time. Sometimes it can be. A lot of times in different markets and different scenarios, there's more at play than just, hey, what's the lowest APR? So feel free to reach out to the Mortgage Mark team if you have any questions. We are certainly here to help. Thanks for watching. And as always, when you think mortgage, think Mark.